Hello and welcome to my April-May newsletter video update. A lot has happened since my last newsletter update to you, and I have lots to share with you. Now before I get started, I just need to remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades I am sharing with you are for illustrative purposes only, and I'm just showing you how I view the current market and sharing this with you. Now we will check in on the current market action, but before we do this, I want to discuss contingency plans. The main reason being is that 2 weeks ago our area experienced extreme weather conditions which caused damage to some property, and this also brought down power lines. Thankfully we were all okay, but we were without power for 4 days. We were also not given any indication as to how long we would be without power. But thankfully I have a contingency plan in place and I did not have to worry about my trading during this time. So that's what I want to ask you. The question is, do you have a contingency plan in place? And what would you do if you have no power or internet and you're trading the stock market? For me, stop losses are my critical contingency plan. I have all my stop losses set online with my brokers, and whenever I open a trade in the stock market, I automatically set the stop loss at the same time. So this meant that I didn't have to be concerned about what was happening in the stock market because I had my stop losses set with my broker. Now I have a few other things in place that I use as backup as well. Now some of these things were great and some of these things worked and other things did not. I also have a laptop available which I can charge and can use this, but without power I cannot charge it. I was able to go to a friend's office and charge the laptop so that I could check in on my emails, and I did have a mobile internet stick. But the mobile reception in the area was not very good during this time, and I did not have very good reception on the internet stick, so that was no good to me either. And I was also not able to keep the laptop charged for long periods of time because we simply had no power. And because we had no power, my internet did not work. I have a mobile phone with internet, so that was an advantage, and I could keep the mobile phone charged by plugging it into the car. So my mobile phone did allow me to stay connected, but the internet was very slow and the phone reception was also not good during this time. So I only use this to a minimum. Now I keep an old Telstra phone in the house that requires no power to run, so I was able to plug the Telstra phone in, and I did have telephone line. However, the telephone lines then went out the next day and we were without phone lines for the rest of the week. So even my backup Telstra phone did not solve this issue. But my mobile phone every now and then had good reception, or we could drive somewhere where we could get good reception if we did need to make a phone call. The other important thing I have is a power surge protector on my computer equipment. That meant that when the storm occurred, because I did have my computer on when we lost power, my computer was not affected. But one of my neighbours' computer was not affected. However, when the power came back on and they turned their computer back on, it actually blew. So they actually lost their computer when the power came back on because of a power surge. So the power surge protector on your computer equipment is also a must, and that's probably what protected my computer. And the other key thing is backup of your documents. So if I needed to get to a critical file, I have a hard drive that has my main computer backed up to it, and I could actually access it off my laptop if I needed to. So these are just some things that I have in place, but the most critical thing for me was the fact that I had stop losses set online with my broker and I did not have to worry about the stock market for that week while we did not have power. And it's only when something like this happens that you realise the importance of having a contingency plan in place. And that's why I want to ask you the question of what would you do in this situation, and do you have backups, and do you set your stop losses online with all your trades? So have a good think about it, and you should have a section in your trading plan called contingency plan, and that's where the information goes. But not only have the information, actually put those steps into place. So let's move on now to what the market's been up to since my last newsletter video update. So on the screen here is a weekly chart of the ASX 200 index in Metastock. The Australian market has been having a beautiful uptrend, which it then paused the end of last year and it became quite difficult to trade. And I did a lot of channel trading through this period, and then it took off phenomenally well and had a very strong rise, and I have had fantastic returns during this period. but since then it has paused. And if we go to the daily chart, you can really see that pause in there. From mid-January, how it ran beautifully upwards, making new highs, pausing, getting support, and then moved nicely up to the 6,000 level before pulling back and getting support again. But since then, it's been churning around for the last 2 months, unable to break through the 6,000 level and getting support at this level here. So the market right now has stalled. And it's moves like this over here where you make the phenomenal returns. And I've had some fantastic returns in here that have really boosted my financial year results. And I've shared all my trades with my mastermind members in last Wednesday's mastermind call. Any client that purchases and completes my Smart Trading Plan and System Development course can become a mastermind member. And I like to support my clients, and I run a few webinars throughout the year, and I share my trading results and my trades and discuss certain topics of interest. So let's also check on what the S&P 500 in the US market's been doing. Here's a weekly chart of the S&P 500, and it's been moving phenomenal into blue sky territory, and then its uptrend sped up. And right now, while it's still moving higher, it's also having a little bit of a pause. And if we go over to the daily chart, you will see that in more detail here. There's a bit of resistance that it's building up around this 2120 level, but overall, those lows are getting higher, and it's forming a bit of an ascending triangle where you can draw an uptrending line that's meeting a resistance level. Now usually this means that there's pressure on the upside and it will push through, but that doesn't always happen. So we've really got some interesting patterns building up in the market now, with the Aussie market churning sideways and getting resistance at 6,000, and the S&P 500 building up a nice ascending triangle pattern. So the breakout is key here, and as to which direction it breaks determines the possible future direction of the market. So now we've looked at the current market action, let me give you an update on some of my trades that I shared with you last time. On the screen here is Macquarie Bank. Now, as you know from my last newsletter video update, I had been regularly trading the channel in Macquarie Bank up and down. And I'd undertaken a channel trade over here that I shared with you, and another one over here which was very short-lived. And then I re-entered it with a channel trade bounce over here. But lo and behold, this time the channel actually broke out and surged very strongly. I sold half and took some windfall profits off the table, and as it continued higher, I then sold the remainder when it got up to a key resistance level and was showing weakness with a candlestick dark cloud cover pattern and divergence in the MACD histogram. Now, of course, no indicator is 100% accurate, and while these indicators look like a good sign of weakness and I exited the position, it was not to be weak for very long. All it simply did was pause, and then it moved to new highs again. And that's when I was kicking myself that I was no longer in this trade. So I simply re-entered the trade when it gave me another entry signal with my trading system, because I ran the scan that day and this share came up again. And then I held on to that trade until my stop loss was hit just recently on the 29th of April. So I've had 2 recent trades on this one along with the previous channel trades. And one of these trades has provided me with a phenomenal return. I held this trade in here from my entry here to my final exit over here for 47 trade days. I made a 23% return on the total trade size. Now, as it was a CFD margin stock, I was only required to outlay 5% to open that trade. So my return on the margin was 463%. And I made an R multiple of over 6, which means I made 6 times my risk amount on this trade. Because when I open up a trade, the amount that I set to lose on a trade is always 1R. And I want to make sure that no losing trade exceeds 1R, but I need to get some big R multiple wins on board, which will give me the big returns. Once I re-entered the trade, I held the second trade for 40 trade days. I made 5% on the total trade size and 99% on the margin, and just under 1R win on that trade. Now, in hindsight, I don't think it was a good thing, my actual exits from this trade. I believe that recently I've developed some bad habits in the market. Because I've been channel trading last year for a lot of it, I had developed habits of entering and then exiting as soon as it hit a resistance level and fell away, which is a great strategy when the share's trending sideways. However, When we get breakouts and uptrends, I was actually taking some profits off the table too early and not letting my profitable trades run. So while I did have a beautiful winning trade with this share, I could have made a lot more profit if I had have let my profits run, and I used my usual stop loss because I did tighten the stop loss up on this trade. So let me show you what the difference with this trade would have been if I simply let the trade run as per my trading plan rules of a trending market. So I would have entered the trade over here as I already did, and then as it continued trending, I simply would have stayed in it the entire way and exited when the stop loss was hit over here. And I would have held that trade for 104 days. I would have made a 44% return on the total trade size, 879% on the margin, and I would have had nearly a 12R multiple win on that trade. And of course, hindsight in trading is always beautiful. So I've really gone back and analysed all my trades, and while I've had some phenomenal returns in there, I've realised that I have gotten into some bad habits that I needed to break. So it doesn't matter how long that you've been trading for, these things can happen. But the important thing is that you're recognising it. So when the market's trending, it's very important that I leave things be. When it's churning sideways, yes, my aggressive exit strategies are very important. So let's move on to my next trade, which is Westpac, which I had also shared with you in my last newsletter video. Westpac, I had also been trading the channel regularly on this one as well. And I entered back into it on the 21st of January when it came up in my trading system again. I sold half when it got to the top of its channel line, and there was really no good reason why I should have sold half because there was no weakness here, and then it burst through. And then I aggressively exited this share along with all the other banks I had open on that same date because they were displaying weakness with candlestick reversal patterns and weakness in the MACD histogram, which was providing divergent signals. So once again, because I had exited too early and it came back up in my system, I simply re-entered into it. So if you do exit a trade early, re-entry is very important. So I re-entered in and then I was taken out again. But at the same time, I did keep my stop losses tight on these trades. So the first trade I held for 41 trade days. I'd made a 10% return on the total trade size, a 200% return on the margin, and I made nearly a 3.5R multiple win. The second trade was a small return with a 36-day hold time, 1.7% return on the total trade size, 33% return on the margin, and only a very small R multiple win there. But once again, if I had have just left this trade be, it would have been quite a different result. So let me show you that now. So on the screen here is that same Westpac trade. If I had have entered it where I entered it and then simply exited when my trailing stop loss was hit on the 22nd of April, the result would have been quite different. I would have made 15% on the total trade size, 292% return on the margin amount, and I would have held that trade for 91 trade days and made a 5R multiple return. So while I made a great return, the return could have been slightly better if I just left it be. So I just wanted to share with you how I have also gotten into some bad habits recently, but I've learnt my lessons from this, and I hope that by sharing this with you, you have also learnt some lessons as well. So let's move on and check out my other trades that I had shared as well. So I'll just close this down. On the screen here is Challenger. Now I had entered this one when it had had a nice breakout. It had been falling. It then started churning sideways and then it moved to new highs and it came up in my daily exploration scan. It moved higher, got some nice support, moved higher again, and then eventually my stop loss was hit. Now I had tightened my stop loss up as it progressed because the market was starting to churn sideways and I wasn't feeling comfortable. So no matter if I had have tightened it up or left it be, I would have been stopped out the next day as well. So I held this trade for 57 trade days. I made a 5% return on the total trade size and 63.5% on the margin. And it was just over a half R multiple win. But I did receive a dividend of 14.5 cents while I was in that trade as well. So that was one of those trades that provided a nice small profit. The next trade is Woolworths. Now this one didn't have the same result as the other one. I had entered into it when it had a breakout and a pullback and I bought into it here. moved beautifully upwards, hit a resistance level, and then showed weakness and was falling away, so I sold half out of the trade. I actually said in my last newsletter video that I was considering half if there was weakness in this trade now that it was near a key resistance level. And that's exactly what I did, and then lo and behold, it simply just gapped, this extreme gap here, and I was taken out of the rest of the trade. Now there's nothing you can do when this happens. So while this trade looked like a beautiful profitable trade at one stage, it can change very quickly, and this is a good example to show you how this changed very quickly. So I held this trade for 28 trade days. I made a small return of 1.8% on the total trade size and 35.8% on the margin amount, and it was just a small R multiple win. So while the entries of trades might be very similar, the result might be very different. So let me share the next trade with you. This one is Spark, and I shared this trade with you, and this share had been trending beautifully in an uptrend, and when it pulled back and got support at the nice round number of $3 and came up in my trading scan, I simply entered into it. It moved very nicely, came back and got some support, which I wasn't concerned about, started to move higher, and then wham bang, gap down, hit my stop loss, and I was taken out of the trade. But I was happy to be taken out of the trade because that share has since moved lower since my exit from the trade. So I held that trade for all of 21 trade days. I kept my losses very small with a negative 4.6% loss and negative 61% loss on the margin amount. But it only resulted in a small R multiple loss, and once again, I don't want my losing trades to exceed a 1R multiple loss, and this one was kept under 1R. So that pretty much sums up all the shares that I have shared with you since my last newsletter video update. So let me now show you one that I still have open in the market that is still running. I'll just close this down. So on the screen here is a share that I entered into on the 5th of March and I still have open now. I bought into this share when it broke into blue sky territory. And you can see over here, these were the last highs that the share had made before it collapsed and fell lower. Then it churned sideways nicely between about $3.10 and $3.70 before it broke out again and had a beautiful run up. I wasn't in the trade over here, I did get some signals, but I was fully invested in other positions. Then when it came up on the 5th of March with another signal and came up in my scan, I liked what I saw. It had strong volume, it had a breakout to new highs, it had a nice candlestick, so I entered in. It then moved a little bit higher, had a bit of a pullback and moved higher since. So I'm still in this trade and I have received a 9.5 cent per share dividend as well at this stage. So right now with a dividend amount, I'm not going to lose any money if my stop is hit on this trade, and I'm happy to see what pans out with it. And I will continue to update you on its progress in my next newsletter video update. So as you can see, I've had a lot to share with you in this newsletter video update, and I hope that you've learnt some new lessons from me as well, because by sharing what I love doing is how I teach. And I teach all my trading systems and strategies in my Smart Trading Plan and System Development online course. And the good news is that I'm in the process of upgrading this course. I've just recently recorded 15 new webinar videos, which I'm now editing and getting all the course notes upgraded. And I will be releasing the upgrade of this course very soon, hopefully in the next month or two. But I will warn you that the price of this course will be rising once it is released. So if you do buy in now, you will get access to the new upgraded course once it is available. The information itself hasn't changed from the original course, but I have added in some new information. I've also broken up some sessions into smaller sessions, and I've added a frequently asked questions section as well, and added some more information on some other trading strategies that I have started to incorporate during different market trends. So if you are in my database, you will get an email as soon as the new course is released. And don't forget how important it is to have a trading plan in the market. I've already talked about contingency planning in this video update and how this should also form part of your trading plan, and I discuss this in my book Smart Trading Plans. So if you don't have a trading plan in place, please check out my book. You can order it from my website or in Kindle version from Amazon, and you do get some book bonuses, including a Word document of a trading plan template that you can complete as you read through the book and create your own personal trading plan. And if you need help, that's when my Smart Trading Plan and System Development course comes in. And make sure you have a good look around my website. I have plenty of information on here, and if you haven't done so already, you can download my free special report and get my top 10 tips to smarter trading. And when you do this, you will also go into my database, and that means you will receive emails whenever I release a new newsletter video. And if you have any questions, feel free to contact me. My contact details are in the Contact Us area of my website. Goodbye for now.